2025 presents opportunities to grow wealth, but even small missteps can derail financial progress. Whether you're aiming to invest smarter, save more, or manage debt, avoiding these 5 common financial mistakes is key to staying on track. Here's what to watch out for and how to fix them. 1. Ignoring the power of inflation. Inflation silently erodes your purchasing power, meaning the same amount of money buys less over time. Relying on low-interest savings accounts will leave you financially stagnant. Invest to outpace inflation. Consider Treasury inflation-protected securities, TIPS, high-yield savings accounts, and diversified portfolios with stocks or ETFs. Review your investments annually to ensure they align with inflation trends. 2. Overspending due to lifestyle inflation. Earning more often leads to spending more, a phenomenon called lifestyle inflation. Instead of building wealth, increased income ends up funding unnecessary luxuries. Stick to the 50-30-20 rule. Allocate 50% of income for needs, 30% for wants, and 20% for savings or investments. Direct a portion of every raise or bonus toward savings or debt repayment to avoid spending the surplus. 3. Neglecting emergency savings. Without an emergency fund, unexpected expenses like medical bills or car repairs can lead to reliance on high-interest debt, which can spiral out of control. Save 3 to 6 months' worth of expenses in an easily accessible account. Set up automatic transfers to build your emergency fund over time, even if it's just $50 a month. 4. Avoiding investments due to fear. Many avoid investing because they fear market volatility. While risks exist, avoiding investments entirely means missing out on long-term wealth growth through compounding returns. Start small with low-risk investments like index funds, ETFs, or target date funds. Use a robo-advisor to simplify investing based on your risk tolerance. Remember, time in the market matters more than timing the market. Invest consistently and think long-term. 5. Mismanaging high-interest debt. Debt, especially credit card balances with high interest rates, can snowball and prevent you from building wealth or achieving financial freedom. Prioritize debt repayment using the avalanche method. Focus on high-interest debts first, or the snowball method. Tackle the smallest debts for quick wins. Consolidate debt with a low-interest loan or balance transfer if possible. Avoid accumulating new debt. Focus on spending within your means. Bonus mistake: delaying retirement contributions. Skipping or delaying retirement savings means missing out on the power of compound interest, which makes growing your retirement nest egg easier over time. Contribute to your 401k, especially if your employer offers a matching program. It's free money you shouldn't leave on the table. Open and fund an IRA, even if you start with small contributions. Financial freedom isn't about avoiding every mistake, it's about learning from them and making smarter choices. By addressing inflation, managing lifestyle inflation, prioritizing savings, and investing consistently, you can turn 2025 into a year of financial growth. Small, disciplined steps today can lead to significant rewards tomorrow. Take control now, and let your financial future flourish.